Alcoa reporting earnings after the bell today, kicking off fourth quarter earnings season. Stephanie, you owned Alcoa in 2011, sold right before the end of the year. Why the change?
Well, because I think that the company will have, it's cheap, but I think it's going to have headwinds in 2012. I think their cost structure is still too high. I think that their exposure to Europe is also still very high, and I think as a result, numbers are at risk. Numbers have come down headed into the print, which is opposite versus last quarter. So the expectations are low, so you could get a pop if they in fact can deliver. But I don't expect the CEO to be very bullish, especially on Europe and about the global, the general global tone. And I just think that you have to think, where do you see growth in the materials sector? And I think there's more growth in Weyerhaeuser, and I think there's more growth in Freeport-McMoRan.
Well, I was going to say, would you be looking to buy back Alcoa if they tend to say surprise to the upside and the outlook is better than you expected?
I'm not as big a fan on the aluminum market, not nearly as much as I am on copper, or even on kind of wood and timberlands. I think that when you look at the valuations across the spectrum, they're all cheap, right? But let's just figure out where is there going to be growth and where is there opportunity. And I think, the Weyerhaeuser call is on housing, and I think you are not seeing an improvement, you're seeing a stabilization. And that stock is very cheap and offers an attractive dividend yield. So does, other stocks in that sector, in kind of the paper forest, Potlatch and LPX, those kinds of companies, they're all very interesting to me. And then copper, China, the November import data was huge for copper, and I think that puts kind of at least a floor on the copper price, and I like that, particularly also with Freeport. You've got the end of the strike. The company lowered production guidance like we expected, and they actually have a nice dividend, and they're going to continue to raise that dividend, and they've got a very strong balance sheet. That's unlike Alcoa. Alcoa doesn't barely even have a dividend, and you at least have to have some sort of support, and that's why it's hard to go back to that one.
Right, so let's go to the Freeports and then the Weyerhaeusers then. If you're looking at Alcoa, if they wind up, say, disappointing and drags down all the industrials, or they wind up surprising and then all the industrials rise, what's your trading strategy for the two of them, especially when we hear Alcoa's information about China demand? I
would be buying Freeport, mid-30s if you can get it. I think that again, that's when the dividend yield gets even more attractive. Weyerhaeuser, I think 17, 18 is still very attractive, just because again there is while you're waiting for housing to at least stabilize and improve, you get a dividend yield. This company has a lower than average dividend yield because it just became a REIT. So over the course of 2012, I expect them to raise that. And as the environment and the macro improves, their balance sheet gets better and they have more flexibility there.
All right, thanks, Stephanie. I really appreciate it. So that's two stocks you can play off of Alcoa's earnings.